it speaks to the U.S. desperation to hang on to their hegemony, to hang on to their world reserve status, and they're grasping at it. The BRICS nations, they continue to accumulate gold regardless of the West's ability to continue to hold the price down.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're always glad to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us this Tuesday, May 17th, 2022. Andy, thanks for coming back on Liberty and Finance for a weekly market update.
Always look forward to it, Don. Again, great to see you.
I understand you're going to be scarcer to get for the next couple of weeks because of some international travel you got planned. Good for you. So we're going to try to grab this weekly market update with you and then reconnect with you when you're back in town.
Yeah, that'll have to be the first week in June. So try to make this one a good one. And certainly if something happens that's off the charts crazy, I'll always make a brief appearance from across the pond. But definitely looking forward to a little bit of R&R anyway.
Well, you certainly deserve it. We wanted to talk about some developments that have happened. There's been so much going on in the geopolitical and financial world. One thing that was definitely what people have been watching closely is this notion of the role of gold emerging on the stage of the geopolitical and financial war. This economic war, financial war that's raging between the West and Russia, for example, and it's funny because after decades of being told, downplay the role of gold by Ben Bernanke and by others of officialdom in the U.S. saying, oh, it's a pet rock or it's a barbarous relic or whatever, and why would anybody be interested? You've pointed out for years and years that the central banks have been accumulating it hand over fist while telling people it's meaningless anymore. And yet suddenly, when it's time for economic war or financial war to break out and the U.S. starts putting Russia in the hot seat as far as sanctioning, and I'm sure you'll have some words to say about that. Some of the first announcements from Russia, from Putin, are as far as backing and pegging or tying the value of the ruble to gold. And we even had Jim Rickards come out and say that the ruble was pegged to gold. There have been other analysts. I'll put a link in the description of this video to another analyst who says, no, that wasn't able to hold, that got broken. It's no longer. My question to you is it possible, or does it appear likely, that in addition to the longstanding justification, if you want to call it that, motivation that the U.S. Treasury would have had for wanting gold to look bad was to make the dollar look good, was this now a double incentive to punish gold, to punish the ruble, which had been pegged to gold, and therefore to punish Putin vicariously? So you get to make the dollar look good, and you get to make the ruble and Putin look bad by punishing gold. But then if it got punished enough to drive it below this 5,000 rubles per gram of gold peg that they had established, that got breached, were those pushing down the price of gold so successful that they actually accomplished breaking of the Russian peg of the ruble to gold? Your thoughts on all of the above?
Yeah, well, I mean, look, you definitely hit it on the head there. And when you and I were talking offline, your comments to me made tremendous sense. Obviously, when you're talking currency wars, if that's what you want to call it, a la Jim Rickards, they had great incentive to make the dollar appear stronger than it always is. That's been part and parcel to the suppression of gold and silver, I would argue, forever, that it's in an attempt to make the dollar seem stronger than it is, because gold and silver, rising gold, is the barometer of the health of a currency. It is the canary in the gold mine. And so not only did they have the incentive to make the dollar seem stronger than it was in a period of massive inflation, but they also had, as you mentioned, and I completely agree with, the incentive of weakening the lifeboat or the the safe passage, if you will, for the Russians to receive payment in gold. And so knocking it down certainly is something that would make great sense under that narrative. At the same time, you also have the Federal Reserve, who is pretending to get tough on inflation. And in economics, there's a term called Gibson's paradox, which we've talked about, I'm sure, once or twice, which is the inverse relationship between real interest rates. Now, I mentioned the word real interest rates, not nominal, but real interest rates, and the price of gold. And you get all of these dum-dums on CNN or CNBC will say, well, with interest rates rising, it's not so good for gold. And what they are forgetting to tell us is that it's the real thing is real interest rates. And a Federal Reserve who, as we've talked about before, it is my belief they will not get tough on inflation. If they wanted to get tough on inflation like Paul Volcker did, he raised the federal funds rate above the double-digit rate of inflation to 19.75%. Not only did that kill the inflation that was roaring, it also killed the bull market in its tracks because the real rate was above zero, whatever it was at that point. I'm not exactly sure what inflation was, called 17 or 18%. Raise the federal funds rate 2% above that, the real return then would have been 2%, even though you're getting 19% return. The real return, when it factored against inflation, is 2%. When we look at it here, Federal Reserve raising the federal funds rate to 0.75%, measured against 9% inflation, the real rate of return is negative 8+%. So it doesn't do a darn thing to the gold bull market. It only allows the talking heads to seem like they know what they're talking about and speak half-truths, telling us this is why gold is down. It's the same group of people that tell us when the market crashes, there is a rush to liquidity and people sell their gold to cover their margin accounts. It's what people believe nowadays. I don't believe that. I think it is the exact same thing in a different suit that you're talking about. But in general, I think it's important to understand that pegs usually don't work. Let's take an example. Take a look at the Japanese yen as an example. Right now, the Japanese yen is crashing. And the reason the Japanese yen is crashing is that they have a trend or a range that they want to keep their 10-year treasury in. And as the 10-year treasury is violating that range, they have to sell more yen to buy more treasury to keep that yen in that peg, and it's crashing the yen. The exact same thing just happened with the UST stablecoin and Luna coin. Same thing. This is that UST stablecoin that last I looked was down to like 17 cents. And that stablecoin was backed, and it's interesting, it was backed by Bitcoin, not US dollars, even though everyone assumed it was a stablecoin pegged to the US dollar. It was pegged through an algorithm where Bitcoin and Luna coin were able to make it a one-to-one relationship with the US dollar. And it was one of the biggest cryptocurrencies, the Luna coin anyways, in the crypto sphere. So what happened is that peg was broken because as the UST was crashing, they had to create more Luna coin to back UST. So the massive creation of more Luna destroyed the price. Pegs don't work. And I think that pegs are easily broken. You can exploit them. And so that doesn't surprise me one bit at all. But in the end, it to me doesn't matter. It speaks to the U.S. desperation to hang on to their hegemony, to hang on to their world reserve status, and they're grasping at it. But the smart money, the BRICS nations, they continue to accumulate gold regardless of the West's ability to continue to hold the price down. And I think part of the reason they don't create a fuss is that they're still in the accumulation phase. So they're making it cheap for them to continue to accumulate gold and silver in exchange for dollars that are losing value. So on one hand, the East is happy about it because it allows them to beat us at our own game. And the West thinks that they're breaking the peg and thinks that their sanctions are working and that, hey, they found a workaround and we'll show them, we'll knock down the price of gold. All it does is incentivize those nations, Brazil, Russia, China, India, South Africa, and the rest of them, to continue to accumulate gold at subsidized prices. So yes, the breaking of the peg worked. More power to them. It did. But I think much like many of the things that they have recently done again, I think it is going to have unintended consequences that in the end will just make them have egg on their face, if you will.
You've also talked with us frequently about the current state of affairs within the retail precious metals supply chain and inventory availability, that sort of thing. Can you bring us up to date? Do you see any light at the end of the tunnel as far as the ability to obtain sellable products in any forms that were more difficult over the last quarters, but are suddenly becoming more available now than they had been?
Yeah, it's loosened up a little bit because with the drubbing of the price of gold and silver, business has slowed down. Look, I believe in being completely transparent with everyone who I talk to, whether it be you offline or to the whole internet, as we're doing right now. When you see 2+ weeks of counterintuitive beatdowns in an environment where we would expect gold and silver to do well, it wreaks havoc. Now, you have to remember something. One of the things that I've talked about, I think, pretty transparently, is the expansion. I always talked about the expansion of the choir out into the auditorium and maybe even across the street. You have an expansion of people who are coming into this industry. And a good portion of that expansion, I believe, somewhere near the silver squeeze time, were people who entered this space perhaps for slightly different reasons. People out there who've listened to me know I never talk about buying silver or gold to become wealthy. I buy it because it is wealth. I own it because it is the only immutable wealth that has outlived 2 world wars, German hyperinflation, the Great Depression, and every pandemic. I buy it because in all of the uncertainty that we see right now, gold is an island of safety. When we see gold reclassified tier 1, it's tier 1 in the respect of being wealth. And to me, that's how I've always looked at it. But I think a good portion of the people have become disenchanted with buying an investment that hasn't made them rich in an environment where it should. And I think they've lost the passion, if you will, for accumulating metal in an environment that, frankly, if you've been in it long enough, as you and I have, you understand the volatility, the suppression, the manipulation. But look, I'm going to simply say this. In all the years I've done this, then again, there has never been a greater reason to believe owning gold and silver is a must in every portfolio. People out there need to change their perception of it and maybe even their expectations. It is not an investment that you buy to get wealthy. It is an investment that you buy that is wealth. And I think a lot of people have become a little bummed out about buying something that has either gone sideways or down in an environment where it should take off. But if you take a step back and realize, why is it being held down with such great strength and ferocity? Because I think that we're getting very close to the end game. And rising gold will only hasten the demise of the dollar and hasten people's concern to get out of the dollar. So, yes, it's getting a little bit easier, but ironically, premiums aren't coming down. So while I maybe don't have quite as much competition in the wholesale community to buy large amounts, premiums aren't coming down at all on anything, and in some cases they're going up. So it's not it's not like everything's gone back to normal. I mean, quite to the contrary. It's just 10% easier than it was this time 2 months ago. But here again, how quickly will that change? How quickly will that change when many of the things that we've been talking about for such a long time happen? And again, I keep going back and back and back to the dollar being perilously close to losing its petro reserve status. When that moment happens, it's going to be a waterfall event in so many of these markets that people will immediately realize the importance of precious metals, and everything that we've been talking about instantly happens just like that. So I don't know. I don't know if I'm talking in circles or not, simply to say that, yes, it's a tiny bit easier, but the premiums haven't come down. So as far as I'm concerned, it's not even, it's very negligible at best in terms of how it translates into meaningful acquisition benefits to the public.
From a preparedness standpoint, which is the focus that we've always taken on our channel since its beginning under the name of Reluctant Preppers back in 2013, our audience has always been concerned about what steps can they take that will help their family to be better prepared to ride out whatever's coming. And one of the forms of precious metals that they've been most interested in over the years is what's affectionately referred to as junk silver, or more properly as 90% constitutional silver. And I understand, just from having served as a broker for the last 2 years, that's been very difficult to keep in stock and able to deliver over the past year in particular, even 6 months in particular. But I understand you've had a bit of a special situation where you've got some on hand. So if people want to take advantage of that to acquire some pre-1965 dimes and quarters or even half dollars that could help them in bartering or in small transactions as survival silver or emergency silver, as it's also called, what can you offer them, and why do you think that people should seriously consider this form of owning silver, even though it's not pure, high purity silver bullion?
Well, that's a good question. And it also goes back to your last question. Junk silver is very much emblematic of what you asked me on your last question about premiums and availability. When you and I started doing these discussions together 2 years ago, I remember doing a promotion for junk silver, and if I'm not mistaken, it was 40, 50, 60 cents over the price of silver. It was really, really, really inexpensive. And that's why I've always had the name junk silver. When I started in the industry in the 90s or 1990, I was able, as a business owner, to buy the bags from other distributors at under its melt value, maybe 20 cents under, and sell it to the public for 20 cents over. And, the dealers considered it kind of a pain in the butt, because when we get a bag of silver in, let's say 10,000 dimes, we need to go through all of those dimes to make sure that they are pre-65. We have one person who wears a jeweler's loop and goes through coin by coin by coin. Imagine what that would be like. There's 10,000 dimes in a bag of junk silver, or 4,000 quarters. And when you're talking, we have in stock right now 60 bags of junk silver. So that's 60,000 dimes if you're going through, 600,000 dimes if you're going through those bags. It takes a long time to count everything, to run them through coin counters to make sure there's 1,000 face, and then to go through them one by one by one by one by one and make sure that they are not crummy condition, and to make sure that the date on it is what it says. Now, they're not all dimes. There's some quarters and some half dollars, and we have 20 bags of half dollars in stock as well. But as much as any single item that I have ever sold, it is emblematic of everything that I've been trying to say to the public, that there is no bull market like the metals bull market, even if the price is not supporting the fundamentals. And it will, but it's not yet. But what I mean by that is that the public who owns the junk silver has no incentive or intention to go back into fiat currency. And so you just can't find it. It is as rare or difficult to find as anything that we have, anything. And so I would simply say to you that at $8.25 an ounce over the price of silver for dimes and quarters, and $10 over the price of silver for half dollars, that's what I'm talking about. You can't find it. That's going to be the best price in the country. And when I sell out of these 80 bags of silver I have, which is $80,000 face value, I have no idea how easy it'll be to get more. It has been as difficult to get junk silver as any single item I've ever sold, ever, and getting more and more challenging. And, when you talk about it not being pure silver, you're correct. It's alloyed. The 90% means that 90% of the weight of each coin is pure silver. So the other 10% being an alloy to add strength to the coin so that it could be circulated for all of these years. When you look at a full bag of junk silver, which is 1,000 face, if it were brand new and uncirculated, there'd be 723 ounces of silver in that bag. Pure silver, even though the weight of the bag is going to be more than that because of the alloy, but 723 ounces of pure silver. The industry has accepted, as a group, as a whole, 715 ounces guaranteed in 1,000 face. And the reason is that 60 plus years of running through coin counters and whatnot, up to a few ounces has worn off the coins, in theory, on 1,000 face. So you're going to be closer to 720 ounces, but you're guaranteed 715. So in order to figure out how much pure silver is in a dime, as an example, you take 715, which is the number of ounces in a bag of 10,000 dimes, divide by 10,000, and you get 0.00715. So if you multiply that times 14, you get almost exactly 1 ounce of pure silver. So the argument for having junk silver, in my mind, is that for the exact same amount of pure silver, in theory, in a world gone nuts, you would have 14 transactions with dimes versus 1 with a 1 ounce silver coin. So while I've always told people that you're fine to have utility and barterability with a 1 ounce American Eagle or any 1 ounce coin, the real reason people buy pre-1965 silver, and I don't even want to call it junk anymore because it is not junk. It is priced higher than any single item we sell in the silver universe, with the exception of American Eagles. It ain't junk anymore. It's anything but. But the pre-65 constitutional silver is going to give you the greatest utility, bar none, of anything that we sell. So we do have 60 bags in stock of the dimes and quarters at 8 1/4 over spot per ounce, and we have 20 bags of half dollars, mixed half dollars, which will be Kennedys and Walkers and Ben Franklin's, and so those will all be mixed together, totaling of 80 bags. And look, this is the first time I've promoted junk silver probably all year, just because it's been so darn hard to find. And but I say it with a caveat. Look, it's not junk anymore. The premiums explain that. And if you're looking for preparedness, if you're looking for something that gives you amazing utility, if you're looking for something, and you can already see it's happening, that gives you added upside potential because of its inability to be reproduced. If you're looking for something that is not part of the Federal Reserve, these are issued by the U.S. Treasury. So these are not Federal Reserve notes. This is U.S. Treasury coinage. I don't know. I think it's a pretty darn good choice. And I've been saying for as long as I can remember that I think a bag of junk silver, or at least a half a bag, 500 face per family member, is a darn good thing to have. It would provide you all the barterability. God forbid we ever need to come to that type of an event. But I'll just simply say this to you. If we woke up on a Monday morning and OPEC had said to the world, we're no longer taking just dollars for oil, in a matter of minutes or hours, or for sure not more than a day or two, you would see the dollar collapse, the stock market collapse, the bond market collapse, real estate market collapse, as dollars come rushing home, interest rates spike, and all of a sudden having something to barter with takes on a whole different significance. So yeah, I think it's a cool thing, and everyone should have a little bit no matter what.
Again, from a preparedness standpoint, which again is our origin here, talking about things that you're going to keep should have multiple uses, and that's where the utility of, it's kind of like a Swiss Army knife. You're talking about government issued, sovereign minted silver coinage, and at the same time, these small, sub ounce size, 14th approximately per dime, gives you incredible utility and flexibility for small transactions. I mean, we've talked with people who call and say, if you're going to have a situation where you want to take some silver with you to the farmer's market to buy a dozen eggs or a loaf of bread or pay for a gallon of gas or a repair or a ride across town or something like that, you're not going to want to be limited to only having big bars of silver or even big 1 ounce silver coins. So this gets you down into that smaller realm that people actually function on a day-to-day basis.
Yeah, and there are a lot of things that have happened that no one ever would have thought possible, and they continue to happen. Baby formula shortages, diesel fuel shortages, our own president telling us that food shortages are coming and it's getting real. Bill Gates telling us food shortages are coming and it's getting real, and you'll eat synthetic beef and 18 food processing plants burnt down in the last 12 months, and on and on and on, shortages of fertilizer and all of these things where, are we heading into some sort of real trouble? I keep talking about my fear that the dollar loses its dollar hegemony, its petrodollar status. You can see that happening if you look closely enough. Being prepared, even if it seems crazy, I think is very important. And, we've been talking about kilo bars and 100-ounce bars and kilo coins. And I think that if you're looking for the biggest bang for the buck, junk silver is not it. There are better ways to accumulate silver if you are cost conscious. If you already have your junk silver in place, if you don't have any, think about what would happen if you were put into a position for a short period of time or maybe longer, who knows, of having to trade where no one wants dollar bills, where dollar bills are being forsaken and immediately dumped. Having something that gives you that kind of utility is a darn good idea. And it's something that I think I've taken for granted for 3 decades as how easy it is to get. It is not easy to get. And $8 premiums, $10 premiums, 8.25 and 10 on halves are as high as I've ever seen in 30 years. So when I talk about it, yeah, it's lightening up a little bit. Look, I have 60 bags in stock, but I had to pay the public, I don't know, $6 over, whatever the number is, $7 over. I don't even know. I haven't bought it myself in so long. My traders do that. But the point of it is we're paying a huge premium over spot to buy it from the public, to offer it to your listeners. And I'd like to just touch on that for just one brief second. There has to be a few dollars spread, because if I buy 10 or 60 bags of junk silver, and let's say I paid $6 over, so 42,000 ounces times $6, I paid $250,000 in profit or in premium that I can't hedge. So there has to be a little bit of a spread between buy and sell. The point of it is simply this, that those are numbers that I never would have thought were possible with junk silver, because it's called junk, because it was stuff that dealers just wanted to get rid of, because it never sold for more than $1 over spot. And here we are. So it's happening and it's real. And I think that if it weren't for 2 weeks plus in a row of poor performing gold and silver in an environment where everyone would think this is its time, it should be flourishing, it would be much more difficult to get, and I probably won't even be offering it. And look, I think there's a good portion of the market that actually believes the Fed is going to be able to engineer a soft landing. They're going to get tough on inflation. They're going to bring inflation down. They're not going to collapse the markets. And both cannot be done. And at that point, when the market wakes up and realizes that the Fed is trapped, or you see something emanate out of Saudi Arabia and the BRICS nations that I do believe is coming, it'll be too late. And at that moment, people will understand the importance of owning something that is opposite the dollar, that is inversely correlated to the US dollar, gold and silver. And having that utility in an environment where the dollar is not wanted, having that barter ability is always a good idea, especially from a preparedness standpoint.
I was just going to say also from a preparedness standpoint, the principle that you're just articulating there about, I know Brad Harris from Full Spectrum Survival, who was interviewed several times on our show, talks about by the time you get the official warning, you'll always come too late. By the time you get the official awareness that the financial system has failed, or that the baby formulas run out, or whatever it is, by the time you find out, it's too late to then go out and acquire it. You've got to get your essentials buttoned down before, not after it becomes obvious that that was necessary. So that's just part of being a contrarian. It's part of being a preparedness-minded person.
what does Rick Rule always say? If you're not a contrarian, you're going to be a victim, something like that. So I think it's true. I mean, in this case, if you are not a contrarian in this environment, being a victim is going to have more substantial meaning. And, I don't know. The thing that surprises me more than anything, done again, is the way I view the world all of a sudden. And I never did this. I view it as a much darker place, one that I think is not going to be as friendly to U.S. dollar and U.S. dollar-based assets as we've all been accustomed to them being. If you think there are supply chain problems now, watch what happens, I think, towards the end of the year, as we're already being told that the East Coast is going to be rationing diesel fuel. Well, most of the metal that comes in from across the Atlantic comes into the East Coast. So, even things like our industry will not be immune to supply chain distortions and problems. And as I've said to you before, nowadays it's like running a logistics company. When you buy from the Perth Mint or when you buy from the Austrian Mint or the UK Mint, you have to pay for it well in advance. And you got to watch it get all the way across on a ship. And then you got to watch it get through customs. Then you got to get it on a truck and hope it makes it to you in a timely fashion, all of which you are paying, you're having the cost of money to deal with and client expectations. It's becoming very difficult. So I look at this as becoming only more and more difficult until the dust settles, God willing, at some point sooner than later. But I sadly don't believe we're anywhere near that dust settling. Quite to the contrary, I don't think this dust storm is even in the horizon yet. It's coming. But that's why you own junk silver and or pre-65. Let me stop calling it junk out of respect. It isn't junk. That's why you own pre-65 constitutional silver. And if you don't mind spending an extra $1.75 an ounce, the half dollars are pretty cool. And I say that to you because, I mean, how many people that are 20 years old or younger have even seen a half dollar? So, they have a little bit of mystique to them, especially the older ones. And but whether you're buying half dollars, quarters, or dimes, having that utility is something that I think is worthwhile, even if it's only 100 face or 250 face. When I say 100 face, that's 1,000 dimes or 400 quarters. That's better than nothing, and that gives you a good amount of barterability, utility, functionality that you're not going to find elsewhere. So 100 face would be 71.5 ounces. If it were uncirculated, 72.3 ounces. So somewhere between 71.5 and 72.5 ounces per 100 face that is broken down into small units that give you the ability to have barterability.
That's one thing I wanted to point out. Unlike a lot of other dealers that people may have shopped online where you have to get a $100 bag or a $250 bag or a $500 bag or a $1,000 bag, Miles Franklin does it completely differently. It's like, what's your budget? And you can get whatever amount is any whole number of dollars face value, even if it's, $124 face value, whatever it is, you can get that quantity and we'll bag it up for you.
Yes, that's exactly right. And I just think it's kind of a cornerstone item to a metals portfolio, no matter how much you have. If you don't have any dimes and quarters, because look, let's just imagine for a moment it's Mad Max. Things happen. Bank bail-ins, markets collapsing, markets frozen, dollar being dumped, interest rates spiking. You see this environment. Suspend imagination for a moment. You're not going to be wanting to walk around with large pieces of gold and silver in that environment. But having a couple of silver dimes, no one's going to hit you over the head with a baseball bat for it. And it's going to provide you great utility. Walking around with a 100-ounce silver bar might be a different story, or a 1-ounce gold coin, or even a 1-ounce silver coin. It's 14 times the size of one silver dime. So I'm not trying to be dramatic, or I just think that it's wise, if you will, to have a little bit of utility in your portfolio. That gives you the greatest amount of flexibility.
Completely separate topic I forgot to mention last week was we've got the Ruble Symposium on Natural Resource Investing coming up in Boca Raton, Florida in late July 26th through 29th. I understand Miles Franklin is going to be there and have a booth, and that you're going to be there in person. And I'm going to be there. My sons are going to be attending the conference. So just wanted to make sure that everybody knows. If you look at the description of this video, you'll see a link to get you registered for the conference. And we really look forward to meeting you in person, shaking your hand. Andy Schectman and Dunnigan Kaiser, we're happy to see you there.
Yeah, and the best part about it, I don't have to fly to Vancouver this year, even though I love Vancouver. It might be my favorite city in North America. The Boca Hotel is probably about 12 minutes away from my house here where I live now, so it'll be convenient. And it's for all of the years. Now, the last few years has been virtual, so, but even still, for all of the years that I have been doing shows, it used to be the Sprott Symposium. Now it's Rick's Symposium, but it's my relationship and friendship with Rick Ruble and my tremendous respect and admiration for him. That's the one show that I have circled on my calendar at the beginning of the year, every single year. It's the one show that I will not miss ever. Looking forward to meeting people there and seeing you there as well, Dunnigan. So that's just a few months away and looking very forward to it.
All right, folks, now you've been warned. Make sure you go to the description of this video, look at the link. You can get registered for the Ruble Symposium on Natural Resource Investing in Boca Raton, Florida this July 26th through 29th. Meet Andy, meet me. Happy to see you there. Andy Schectman, CEO of Miles Franklin Precious Metals. As always, thanks for joining us on this weekly market update, and have safe and happy travels until we see you back in about 3 weeks.
Thank you so much, Dunnigan. I look forward to it. And if something crazy happens, reach out to me. I'll chat with you from wherever I am, even if it's just for a few minutes. But in the meantime, I hope you and everyone out there has a great rest of your day and a great couple of weeks again until we're able to reconnect.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.